Good evening, ladies and gentlemen. This is Clueless Safe Trading Frank. It's approximately 8:40 p.m. on August 13th, 2018. This is a Clueless Safe Trading Strategic Weekend Update webinar, slightly delayed by a day because of technical issues on system upgrades and stuff that's going on my end. So that's why we didn't have it last night. Full disclosure, this is purely for financial education, not for any solicitation or advice. The session will be recorded, uploaded to the Clueless Safe Trading YouTube channel for free viewing by all other members or anyone else out there would like to review these extremely useful and powerful strategy webinars for their own benefit to understand a little bit about what's happening with the markets and such. So feel free to pass the word around. On that note, let us begin. We have a great crowd here, and I look forward to basically keep this within a reasonably short period of time and get straight to the point. All right, guys. First and foremost, I put this up here to stress a point. All right. Tactical trading discipline. I want to keep on harping about tactical, right? Sounds like a repetitive term, but it's a fact. All right. And if you are not a tactical trader in these type of markets and you are not following the levels that I'm constantly pushing through on my charts, where exactly the markets are going and backing off, hitting and selling off, or hitting and then bouncing off, then you will completely always, which many of you are doing, I know that for a fact, give back all those beautiful profits which you had, let's say, the first part of the day or the first hour or 2 hours of the day. This is a recurring standard procedure, as I'd like to say, of these robotic machines, what are known as algorithmic high frequency trading black boxes, HFT. I have a couple of phenomenal articles on HFT on my website. If you care to go ahead and, and these were put out there back in 2015 or 16. I've been talking about high frequency trading black boxes because I know what they do. I have friends who write the codes for large Wall Street investment banks and a couple of hedge funds. So what's going on right now, and I'm just diving in, directly before I go over the broader overview of the market, is that excuse me, is the fact that if you are not following a strict discipline of understanding what the backdrop of the markets are. In this particular case, I focus primarily, as you know, on the E-minis, the 15-minute, the 1 hour, the daily, but let's say the 15 minutes and the 1 hour, which are extremely important to all of us, then you're just going to give back everything. And many of you are doing that repeatedly. And it's really a pathetic representation of how some people are trading. Now, got to remember one thing here, guys, all right? We're all in the same boat here. When I'm recommending something, I'm in that trade. But I'm managing it a heck of a lot better than almost all of you out there. And I know some of you are doing great and managing it much, much better, and really starting to understand my charts. It's not that hard, guys. Come on. I mean, how hard it is when you have a big fat red arrow here and it's saying it's going to sell off here, and it gets close to it. And how many times did I put out there? 28.45 was going to be a major resistance. I even write it in plain English. We do speak English, right? So 28.45, and where does it go? It goes to 28.44 or so, and sells off. But just visually look at it. So all these beautiful profits that you had for the first part of the day till for the first hour of the day, if you didn't take it, whoosh, you're in the doghouse. And it's just, and then you don't do anything the rest of the day. You don't buy the tactical bottoms. You don't do anything, Well, So this is something really, really important. It's so simple, but it's so important. Now, some people might say, hey, for a legitimate reason, hey, I wasn't accessible that time and stuff. Well, I have only one thing here. Markets don't work on our schedule. I'd love the market to, my charts are so precise in most cases. It is. There's no question about it. Not just market charts, individual stock charts. So I'd like every chart to work every 5 minutes. Yep. But markets don't work on our schedule. Like I told a great member of ours, MB, today, that on one of the stocks, she said, I'd like to have sold it like, before I was flying and stuff. I said, markets don't work on our flight schedules. We have to work around it. And there are many traders here who have access to watching the markets and trading on a full-time basis. No excuses. So whatever it is, what I'm basically getting at, guys, without harping on this too long, that if you are not, and I've said this so many times, if you guys are not understanding where they're going to attack you and ambush you, okay, where the buy zones are, which I mark very, very clearly with big fat arrows, with all kinds of stuff. Let me just not make this almost redundant, okay? Then if you're not understand the background where they're going to basically move the markets at what levels, because after all, I've explained many, many times, at this moment we are in a head and shoulder pattern. Here's your head, here's your left shoulder, here's your right shoulder. Well, guess what happens? It takes it right to the right shoulder, as I showed, and then boom, sells off. Now it's creating a W pattern. So bottom line is that, and it's going to try to attempt to take that right shoulder out. Will it happen? Sure. Can happen. Sure. So bottom line is, and then you got to match that with the underlying stochastics, which are extremely important. And I even put arrows there. I mean, this is so redundant. Sometimes it's laughable that I actually put arrows to show when it's oversold. I think I'm insulting some people's intelligence. Don't you think so? I think I'm going to stop putting these type of arrows down here, because I thought to myself, oh my God, I'm actually walking a 30, 40, 50-year-old adult by the hand and saying, okay, when it's down here, it's really oversold. It's almost insulting to some people, and I think I'm going to stop doing that, even though I probably won't, because I try to help as many people as possible who are somewhat technically or emotionally very challenged when they're looking at charts. So whichever the case, what I'm getting at is that if you're not following these things here, and these are happening very, very fast, guys, okay? They're happening in some cases in half an hour, some cases in an hour, some cases in 2 hours, then you are going to just have a horrible day. Now, I'm not saying that you're going to have a great day every day. Whatever your goal is, to make a couple $100 a day, or a couple of $1,000 a day, or $100 a day, even $100 a day, 5 days a week, that's $500 a week. Just think about smaller numbers. That's $2,000 a month at a rate of roughly $500 that you are skimming from the market every day on average. Imagine if you made $1,000 a day on average. Not every day. I'm talking on average. Ladies and gentlemen, that's $5,000 a week. Okay? That's $5,000 a week. Got to have some sort of number in your head what you want to do with the amount of money that you're trading with. At $5,000 a week, that's $20,000 a month. That's $240,000 roughly, obviously, a year. Some people say, that's not a stretch. I know people on average are doing anywhere from 2 to 4K a day, with slightly larger numbers. Position sizing is a little bit bigger. Smarter traders, very tactically disciplined. So 2 to 4 grand a day. Let's take the higher number for a change. 4 grand a day. They are basically cleaning out 20K a week on average. Now, this is not taking into account some big, powerful takeovers or Tesla type of huge movers, things like that. the outliers, which are extra juice on top of things. So 20,000 a week, they're making 80,000 a month on average. Okay? What does that come to? That comes to 960,000 a year. Now, if you don't want to think with, if you don't think that these numbers are possible, given the type of unbelievably precise, huge trades that I'm giving in between some losers, but I'm talking the majority of them, and you don't believe me because you're like in La La Land somewhere out there, then just walk over to the Clueless 8 Instagram channel where my marketing guy, who's a great guy, will highlight all these huge trades we have delivered. Remember, the Instagram channel is for marketing purposes, for advertising purposes. These are actual trades. Whether it be the Yelp, whether it be the Roku, whether it be TTD, which forget about it. Whether it be OSTK just on the earnings pop. And I did say, as one of our good members, Bob, said, oh, it's going to go to 60. I said, no frigging way. And if you look at my charts, you'll see. And remember, this is for highlight purposes. This is not for to follow during the day. This is something you can take a look at and say, whoa, look at those things. Because I can't put all this stuff on a consistent basis during, obviously, during market hours. I mean, come on. All right. So if anyone thinks, so please, that's the reason why you need to follow the Instagram account. So at the end of the day, you can go ahead and just review quickly some of the highlights of the big trades that have happened for that day. So if anyone thinks that it is possible to make almost $1 million a year, all right, and I'm not here to waste my time at 8:30 and 8:50 in the evening, all right, seriously, then they better wake up. You can do a heck of a lot more, I'll tell you that, and you don't even need to have a large base of money that you're trading with. You can make this type of money with 30,000 in trading capital. How about that? Seriously, done the right way. 30,000 in trading capital, or 40, where you get buying power, where you get patent day trader status, so you can really maximize the machine movements. So basically, with anywhere with 30 to 50K, which gives you a lot of flexibility, obviously, position sizing, strategic, tactical trading, not chasing prices like I told one of a member who canceled today. Great person, to be honest with you. And I said, you know why? Because you basically were a price chasing, atypical emotional retail trader, price chasing, yo, like a yo-yo ball or whatever it is. You know what I'm saying? And lost money repeatedly. So the person said, emotional, you're funny, Frank. I said, no, I'm not funny. I said, the truth is not pleasant, because that's what I tell myself when I do stupid things. I tend to do a lot less stupid things than most of you guys out there. All right. So bottom line is, I said, I'm not funny. I'm market smart. And I've learned, and I keep on learning very fast. And I do know a little bit of what the heck's going on. So with 30 to 50K, if not less, you can make almost $1 million a year, if not more. I'm not taking into account takeouts, buyouts, big time moves, ballistic, 30-point type of mover. Let's think about it for a minute. So if you take this denominator down, smaller numbers, then this number can be smaller. So let's get straight to the point here, guys. All right. Many of you, I'm not here to make things pleasant. That's not my job. Okay. I'm somebody who is very straightforward, speaks the truth. I talk to myself a lot of times that I don't like to even hear myself, because I'm really hard on myself, because that's the way I am. The biggest competition is you. But many of you are doing some really stupid things, guys. Many of you are moving up really fast up the ladder. Very proud of that. and many of you are just keeping on doing the stupidest thing ever, over and over again. So it's time to cut it out. So saying all that, the 1 hour chart, the ES15. And again, I repeat, you want to get into nitty gritty of it. You want to take my time and really, have me explain everything. Well, I ain't working for free, right? That's it. No slave labor here. No pun intended. So sign up for the advanced coaching session, pay that puny small amount, and learn the reality of how things happen. And I go ahead and teach that very, very well. No question about it. Real stuff, not the fake garbage that's out there. Okay? There's a lot of training videos for new members. The training videos can only take you certain places, because if you're not applying them, and and of course the real-time advanced coaching sessions are intense, very, very educational. You can apply those same things and actually make money. So many of you do what you need to do. So what it really comes down to, guys, ladies and gentlemen, is that these charts are absolutely critical. They are gold. And if you are not tracking them to a certain degree, and you're letting profits slip away every single day, where you're seeing your P&L beautifully higher at the first part of the day because some big buy programs came in, pre-market, everything looks crappy. Like today, pre-market, everything looked crappy. And then what happened? Then the market, this was 6 o'clock. And then the markets picked up. I put out the pre-market charts. We were coming back really strong. This is where the markets opened. 7 o'clock, 9:30, and this was 10:30. So 9:30 was right here. So markets open. We were down like, I think, maybe a point. Markets started to surge. Big shorts got squeezed. And don't ask me why these things happen, okay? Because enough of asking, like, why are these things happening? Enough of the explanations. We don't always know why these things are happening. I'll tell you why it's happening. Because some short fund got big time squeezed, and that's why it went up between 9:30 and 10:30, exactly to the levels we were supposed to go to, which is the 26.45 level, give or take a point, and boom, that's when we sold off. Was the sell-off supposed to be that steep? Nope. Were there any specific news at 10:30 that caused it? Nope. So at one point, stop asking why things are happening, because all that analysis is all it's doing is paralyzing most of you, because a lot of you are like big time, like, oh yeah, should we do this? It has to be exactly right before I get into that trade. Like, screw that crap, okay? Seriously, just get in there and just do it. Because the markets are so multifaceted. The machines, there are so many algos, not just one type, that are battling each other out there. Some short, some long. So that's why these charts are so critical. So instead of trying to over-analyzing it, look at futures. Are up 4.5 points. By the time we wake up tomorrow morning, we're probably going to be exactly where I'm showing we should be. Or I think it should be, but we could be, which is right around here. Right from here to here is 6 points. That means futures will be up 10. And everyone's going to be like, whoa, it's great, futures are up 10. No, it simply means we're just attacking the downtrend line. I mean, come on, guys, okay? Just trying to help you here. Remember one thing really clearly, and just remember this, please. I work really hard, and that's my job. I'm not here, I'm not here like saying, oh, pat me on the back and say, oh, Frank, you're a great guy. I don't need to know if I'm a great guy or not. All right, God will judge if I'm a great person or not. My wife will tell me if I'm a good guy or not. All right. The rest of you guys, it means nothing if I'm a great guy or not, honestly. All right. But what I'm getting at is I work really hard to help everybody a lot. I mean, a lot. And sometimes I get a little bit frustrated because some amazing trades like Square. I mean, I'm not going to sit here and explain it. I mean, the thing was at freaking 40 cents and goes to or 50 cents at the close on Friday, and I told people to buy it, right? So the calls on the Square, the 73s, were around 60 cents. When I first called the alert, it was around 80 cents to $1. I dollar cost average down. I showed the stock. I said it's going to be fine. It's going to go, and this and from 60 cents at the close on Friday, it goes to $2.31. That's square. $2.31. I mean, that's 300% net ROI or a four bagger. So what gives? So that's what I'm getting at. So I kept on saying the stock is going to make a new high. And god damn it, the stock made a new high, 74.58, and then pulled back a bit. Somebody says, well, is it still going to go higher? Well, enough of this is still going to go higher. I don't care if it goes higher or not. I know it's going to go higher. And secondly, why didn't you buy it when I said to buy it? Seriously. I mean, it's like it kills me when these things just fly by and people are coming out and saying, "Oh, I'm gonna buy this one right now." I'm like, what about all these great trades that are being placed in front of you, that were placed in front of you on Friday? You know, just keeping a short-term duration. Yeah, Friday, low of the day. What about Spotify, which is on its way to $200? What about that? Closed at 189 on Friday, went to 196 today. The calls were up a gazillion percentage points. Spot. So, key is that there's only a limit what I can do, and then you guys have to do what you guys need to do. All right. So let's get back to the basics because we don't want to harp on for too long. This is what the markets are doing right now. All right. And what's important is this level here, which is the right shoulder. This is the left shoulder. You guys can see that. This is your head, rounded head, double top. Here's your left shoulder. Here's your right shoulder. And it needs to negate that. What does negate mean? Simple English. It needs to bust a move real powerful over the 28.45 level. And you guys can see that clearly too, in order to negate this negative pattern, which is the head and shoulder. But it doesn't matter if it's a head and shoulder. We're still making money because here's your neckline, which also happens to be the breakout range, right there, which I'll show you, which I've repeatedly shown on the 1 hour chart. This level, see this blue line here? That's your breakout level because that's where the market broke out of. See that? That's where the market broke out of. So it retested that, went a little bit lower. This is another breakout line here, the first breakout line, and that's exactly where it went. So the lower level, as I've repeatedly said, we have a buffer zone or major support at somewhere between 28.08 and 28.20. This is your support zone. It breaks that, the market's going to clean fall 10 points and go down to 27.90. You can see that very clearly. So as a trader, if you're seeing something breaking really rapidly, you'll have to take evasive action. Do what you need to do. Go into some cash, trim some positions, even though I alert people as timely as possible to trim positions, sell partial profits, take full profits. You know, I do it all day long. Go through my Twitter feed because I see what's going on. I see the first candle develop. I don't know if it's going to cause a waterfall decline and a fast move for the next hour all the way down here. Remember, each candle is 15 minutes. But at least I warn people, hey, time to take some, Google's up 14 points. The calls are up from $5 to almost 10. Obviously, I took profits. And if you look at my Google chart, hey, that's what traders do. They look at charts as quickly as possible. Doesn't matter how busy they are. After all, you don't want to lose money, and you don't want to lose, but at the same time, you don't want to really quickly view your own charts and quickly look at mine. Then you're in deep trouble. And it doesn't feel good, right? When all those profits disappear. I've been there. I know it. I'm not there that much, believe me. But for some of you guys are there a lot. So instead of saying, yeah, I know, I got to be better. No, just do it. All right? Just do it. So real important is this head and shoulder pattern needs to be negated. Will it happen? My opinion, it will happen. Now, this is a short-term chart. There's a lot of noises, lots of bars because it's a 15-minute chart. But it's important because a lot of people are managing trades on an intraday basis. Some people are taking down large position. Taking down most of the position at the end of the day. I know many traders who do that, even within our group, and good for that. There's no problem with that. No one's asking. Look, I can only suggest if you wish to basically go mostly in cash at the end of the day, it's up to you. You'll miss out on those big gap opens, no question about it. But at the same time, if you have nice profits, take it and run. What I generally do is a mixture. I take big profits down, and then I play with smaller amounts and setups that I do. So even if I'm down on those, the bulk of my money is on the trading on the aspect is nice and cash in the bank. So this is that's my modus operandi because or MO, because the bottom line is that I don't want to give back those profits just because the algos decided to sell off the market right at that level that I showed. And being my own charts that I'm creating and sharing with all of you to benefit, it felt great. And I do that quite often. Well, some of you are like, like, oh my God, it was up, I was up, now I'm down. Like, what did I do? Well, what you did is your own fault. Because you could clearly see that this was something that was a high probability move that could have happened. No guarantees, but high probability move that could have happened. But you didn't act on it. So please do it, because I do want everyone to sort of at least have some semblance of tactical sanity. How about that? All right, a lot of $5 words here. Tactical sanity. Be tactically sane. Stop chasing prices. Just the numbers on the stocks. Algos will move numbers out because they know when you're drooling. Like my good friend and our fellow trader JB says, the Pavlov syndrome, right? Pavlov theory, where the dog drools and the digestive enzymes flow when they think of food and they see that meat. Well, the algos will dangle that meat in front of you and then slap you so fast, hit you so hard, all your profits are going to disappear. You're going to be in a big pool of loss. That's what the algos are meant to do. So instead of following the Pavlov syndrome, follow the tactical syndrome of trading this chart. This is your 1 hour chart. Less candles. Each candle is an hour. You can clearly see what's going on. Same thing here. All right. Now we got oversold. Now we're going to get overbought. If we wake up in the morning and the futures are up 8 or 9 points, 7, 8, 9 points, we're going to be overbought. Does that mean we're going to do a full reset? No, but is there a good possibility we're going to do this? And the market opens up here, let's say around 28.45. That's a lot because that means 15 points from here. That means futures will be up 20 points at the open. Everyone's going to be like CNBC and Bloomberg and all the other financial channels are going to be, whoa, look at that. Futures are up 20 points. Great. The Turks might just love us again. And we love the Turks, which we do. Turkish people are great people and great food. It's a political game that's being played out. But I'm just saying, I'm talking about the political stuff. So, oh, it's great. No, it's not great. It simply means that the algos are going to hit the market really hard here, and then decide whether or not it's going to create a nice it'll be like this, whether or not it's going to get up to that 2860 level, whether it's going to enter this this acceleration zone or this acceleration channel that we were above before we broke down. I can clearly see the pattern. So can you guys. Come on. Please tell me, you can't. Say you can't see this. I mean, come on. This is not hard. So this is what's going on. There is a pattern symmetry in play in a big way. Now, this is the big number. So just because it opens up 20 points, don't get excited. Tactical longs that you have, like I put out there first thing in the morning, if we're up 10, 15 points, if we're up 6, 7, 8 points, take the profits. Whatever you don't take, they're going to target you if it's reached that level. Now, because the speed and the frequency of the machines are so fast, you have to act. Remember, markets don't work on our schedule. They don't work say, oh, I'm going to be flying at 10 in the morning, so I want to sell everything by 9:45. I want the market higher by 9:45. Yeah, we all wish that, I know. All kidding aside, they don't follow our flight schedule, all right? Our itinerary. So these charts are telling you what you need to do. That's it. You gotta keep an eye on this. Use your own system, method, whatever you use. You gotta have I said this a zillion times. You gotta have a platform or charting platform which mimics mine. In between all the other, you might be using TradeStation, you might be using Schwab, you might be using whatever you're using. But one of them has to mimic mine, or else you'll never know the power of how powerful these charts are. All right. Uh, so that's your hourly chart. I explained that what's going on. Now it's a W pattern. Remember, they're recurring technical patterns within a larger pattern. So these larger patterns is like a multi-day, not like multi-month or multi-week. So here's your head. I repeat again. Here's your double top. I remember what I said. We were going to basically have a consolidation. Well, the consolidation went a little bit more. Remember I did this cone? We're supposed to come down here. Well, we almost did come down here. We didn't, and then we broke with the turkey thing that hit us, hit the market, I should say, on the 9th. What day was Friday? Friday was the 10th. I'm sorry, the 10th. Yeah, on the 10th, that's when all hell broke loose. To a certain degree, not like. So now we're going to take a look at the daily chart. A daily chart is a mixed picture. We do have crossover down on the stows. Okay, so it is possible we get a sharp sell-off and we fully reset. And if we do a full reset on the daily, this is kindergarten stuff, guys. All right, please. On the daily, you get a full reset below 20 RSI on the full stochastics. You got to buy with hands down, because there will be a major reflex bounce. Now, I don't want to spend the whole evening here explaining a whole bunch of stuff on what's going on, but the Turkey situation can take a turn, here's a possibility, can take a serious turn for the worse. Turkey is a very strong economy. All right? When the Greek crisis was happening and Greece was falling apart, Turkey's economy was thriving, still thriving, but they mismanaged the economy to a certain degree before good old Donald slapped them with the sanctions. Turkey's playing a political poker game when they shouldn't. With this, with the pastor, and there's a whole long story behind it, because the guy the pastor was supposed to be spying for sits here in somewhere near in the Poconos. Okay, his last name is Gulen. You can look it up, Gulen. He's a Muslim pastor or something. He's a big opponent of Erdogan, and believe it or not, General what's his name, General Flynn was actually working on behalf of the Turkish government. And in a proper consulting, as a consultant, as a foreign agent for the Turkish government, nothing wrong with that. You can register as a foreign agent and work for, represent the interests of another country. That's standard procedure. General Flynn, one of the things that he was indicted for, that he was registered as a foreign agent, one of his big clients was Turkey. Erdogan, he was actually trying to get the U.S. government to send this guy who's sitting out in the Poconos in a massive estate, who is a big opponent of the present government in Turkey, to send him back. So supposedly this pastor, Branson, and his group were working with this guy sitting in the Poconos, the Turkish, the political opponent of Erdogan, who's the president of Turkey, the strongman, who actually Donald and him got along really well, to be honest with you. So bottom line is, so that's the game. That's the game being played. So in the meantime, yeah, like I was saying, so General Flynn was actually working on behalf of the Turkish government to get this guy extradited. But and once Donald won, he was supposedly going to be, he was supposedly going to be handed back to the Turkish government. Of course, that didn't happen, and now poor pastor has been in jail for almost a year. I mean, not jail, house arrest and stuff. So this is a serious matter. But that repercussion is rippling through the emerging markets, Europe included, because Turkey is a very powerful economy. And what do you call, the European banks, they have a lot of, exposure there. So if the European banks croak, believe me, it's going to hit us more. So whether or not it's a contagion effect, and it's happened many times before. Remember the Greek crisis? We used to always follow the Greek headlines, like, oh my God, whether they're going to get the bailout from the EU and stuff. You guys should remember that. That was like the hot topic of the day. The markets are going to fall apart. We're going to go in the bear market, blah, 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 blah. It's the same stuff, except it's not that serious. It's a much stronger economy. Turkey does not need money, bushels of money like Greece did, and all that stuff. So it's going to get resolved. But in the meantime, there's going to be a lot of turbulence. So saying all that, this is where we are. So instead of dissecting, like I said in one of my comments today, instead of really dissecting every piece of news, like, okay, be a political game theorist, well, that's my job to do. I love doing that, trying to figure out every little nuance of what's happening. But aside from that, cut out the noise, follow the charts. So what do we see here? We had a very powerful bull flag channel, which lasted for a couple of days. I think more like 2 weeks, just like that. We broke out of it. We came back in it. And then we broke out of it twice, once here and once there. Bang. So this green shaded part is your bull flag consolidation channel. Remember, in simple English, I write this stuff on my posts. So read them. And you don't need to be that technically savvy. If you just read my stuff and then look at my charts, you'll become pretty damn good. All right? And you've been giving your buddies at the game or the bar a quick technical analysis lesson. They'll think, "Wow, you really got smart," and you'll be like, "Yeah, I did." All these bull flag consolidation channels, I fully understand it. Well, you guys do understand it. It's not that hard. So here's your bull flag consolidation channel. We broke out of it. We came back in it. We broke out of it again early August, and I even put the dates, the similarity of what I see. So this is where we are right now. Now, there's a possibility we test the lower end of the channel, which is around 27.90. So don't freak out. Don't freak out like crazy. We'll certainly be doing some intraday shorts when that happens. If I see it breaking below that, you can see that below the 28.18 level. So that would be 20 and 9. That's 30 points. From here to here is 30 points. All right. So let's do the math here. So 30 points. What's 30 points? 30 points is roughly 210 Dow points. 30 handles on the E-minis is roughly about 210 Dow points. You know what's it going to do to individual stocks? It's going to smash them temporarily. So you want to play whichever way you want to play. You can short individual stocks. I generally tend not to do that, as you know. I'd play the clean indices. So you buy the SPYs, you buy the SPX puts, and bang, it happens real fast. Now, when this happens, if it happens, it's going to be very quick. Sometimes it's overnight. It's too late for us to act on. So 210 points, you'll get about 200 to 300% on your money. Instant gratification, ladies and gentlemen. But you have to follow the charts because there's no assurance that it's going to do this and then bounce from here. There's no assurance that it'll even go there because all it did today, remember I put those puts out there, the SPY puts, what were they? They were around 18, 19 cents, 16 cents. They jumped to about 22 cents. Before I blinked, they were down to 9 cents. Good. That's because the market came down here. That's why there were lotters. I mean, there's a saying in the business on Wall Street. You don't want your hedges to work because a hedge is supposed to be a small hedge unless it's a full-scale breakdown. In that case, you put a decent sum of money on the short side, make a ton of money as you exit as the market falls and you cover. But generally, a hedge is supposed to be small. So there's a saying on the hedge fund business. They say you don't want your hedges to work that well. Why? Because if your hedges are not working, that means all the longs that you're hedging against are going higher. The majority for money is moving higher while the hedges are moving lower. Bingo, right? So there you go. So bottom line is, you can see what's going on. This box here, is it possible that we test 27.91? It sure is. Will it happen during trading hours? Don't know. Will it? Yeah, I mean, it sure can happen. A couple of power, like threatening tweets from Donald on Turkey, on China, on trade tariffs. Yeah, we'll get there real fast, guys. All right. Can it happen overnight on global market volatility, which is extremely heavy these days? China was down 300 points. They're getting hurt bad. And Russian market collapsing. I mean, the Russian market is in deep trouble. The ruble. Ooh, I wish I was in St. Petersburg right now. What a beautiful place. Went there a long time ago. Gorgeous. Russia's a beautiful country to visit. Great people. I have a lot of good friends here. And Turkey, unbelievable vacation spot. My friend Scott here probably knows. Unbelievable spots. And went there a long time ago. Cheap as hell. Tourists are flocking like crazy. Shopping's going. Tourists are buying stuff there because the lira is so weak right now. You could just buy anything you want. It's a great time to vacation in Europe and Southern Europe, out in the Mediterranean, right? So bottom line is that Russia's in trouble. Turkish economy in trouble. Short-term trouble. Russians are pissed out of their mind with our sanctions, and they're all aligning together. Russia, China, Turkey, they're all aligning together, even though Turkey is our NATO ally, and we have the largest air force base in Shirlik, or whatever they call it, in northern Turkey, I believe. One of the largest air force bases where the B-1, B-2 bombers reside, and we use it as the launching ground for when we have our little skirmishes out in the Middle East. All right. So anyway, the bottom line is this can happen. This is the line in the sand where we come to the lower end, which is the 2760 level. Is this possible? Sure is. Absolutely. There. So is this possible where we do, in between all these volatility moves, we land up coming down to the lower end of this broad? Remember, we're traveling within this broad macro channel, which is approximately 600 to 700 points. This channel width is about 600 to 700 points on the Dow. It's a lot of points, huh? It is a lot of points. 600 to 700. So is it possible we somehow get down here? Sure, we can. Then everyone just hands up and goes, "That's it. I'm never going to buy a stock again." Sure. Mom and pop's taken so much money out of the market this year, it's not even funny. Great for us. We've been nailing it. So, and then the market zigzags its way all the way up to where it should be going, in my opinion, which is around the 2900 level. It sure can. So the charts are all there without really going on and on too much. The chart's already there for you guys to see what needs to be done. So the daily charts are telling us that there is support on top of this bull flag consolidation. However, these stores are telling me that we are not done with the sell-off yet. Now, the shorter term pictures are a little bit different, as I showed you. We have this to contend with, like I said, the right shoulder, right? I'm sorry, the right shoulder. This is the left shoulder. We have to contend with, and this is a formidable resistance. I wrote that a few times today. If you guys care to read and act on, this is your 15-minute chart. Lots of zigzags. A bearish outlook. Remember, every trader goes into a trade with a bearish or bullish cognitive view. So your cognitive biases in your brain looks at a chart and says, "This is where I think it's going." A bear will always look down. A bull will always look up. The bull will say, "No, we're supposed to be up here, guys." And a bear will say, "No, we haven't finished this complete pattern from the beginning of August, from the 2nd, and that pattern doesn't get resolved or completed till we reach and retest the 2790 level." That's what a bear will say. A bull will say, "Nope, we got this breakout level that we've been retesting. Looks like a double bottom. This is where the breakout started. This is where the rally actually started. So we are going to be going higher." That's what a bull is going to say. So your cognitive bias on how you look at things, you have to try to remain as neutral as possible in your head, which brings me to a very, very important point here. That's your Spotify. Beautiful trade. Beautiful. Don't get too excited when you're up a lot. Don't get depressed when you're down a lot. Keep a calm mind. Stay stable. This is a battle you're fighting. Just because you shot a couple of bad guys doesn't mean the battle's over. So don't get too excited. Sure, share your happiness. You're up. Oh, wow, look at that. Bang. So much happiness. First thing in the morning. I didn't see much from a lot of you guys because you guys were possibly doing some wrong stuff. That's okay. We're not going to harp on that. We've already covered that. So Google goes from 1252 to 1267. 1266 today. Boom. Those calls, I was in the 1267s. They went from roughly $5, $6 to $10.50 almost. I'll take it. Because I was buying those tactical lows on Friday. Even Netflix worked. Down a little bit on the second batch. The calls on Netflix, the CFO moved on. Big deal. What's it going to do? Really hurt Netflix's business? The stock was down a couple of points and went positive. The calls went from 31 cents to 105. The 360 calls. That's 300% plus. Or, yeah, close to 300% in net gains. Intraday on lottos. So the specifics are all on the Twitter feed, so I don't want to rehash the same thing over and over again. So, look, all that stuff. Just, guys, you go do your homework. Tesla calls the 400s, went from 25 cents to $1.06. That's a four-bagger during the day. I sold a whole bunch of it at above 90 cents because I was long on them from 46 cents from Friday. 45 cents. Follow my chart on Tesla. So what I'm getting at, and I want to repeat this, don't get too excited when you're up a lot of money. Don't get all crazy, banging your head when you're down for, sometimes for fault of yours because you didn't manage your trades right. But in many cases, not a fault of yours. Markets just suddenly turn. Keep a calm head. Look to see where you can make that money back up. There are enough opportunities and trades that I show. Act on them. Take a couple of earnings trades. Some will work big, some won't. And some you'll chase it the next morning on the reversal trades and make a ton. We've done those, haven't we? Of course we have. So you got to go with that mentality. And you'll be successful. That's it. Now, let me just show you we have a bunch of earnings that we set it up for. Tomorrow is going to be, this is a beautiful chart. Let's see how it works. Technically, it definitely wants to go higher. Now, whether or not it's going to do it on numbers tomorrow, that's Advanced Auto Parts. We have been trading the stock all the way from 80s. Lately, I haven't been trading it, but it's a good looking chart. So, wow, earnings tomorrow. I got excited. Like, wow, let me look at the chart, put it out there. And this one, technically speaking, should go to 170 or at least the mid channel, which is 152. 152, more like it, because the IV implied volatility is around 13 points. So I'll take 152, 160. Beauty. I always buy a basket approach when I buy the earnings things. I don't see why some of you don't do that. Buy one call of each. By the time you buy 10 of them, you probably have a decent sum of money in that basket, and you don't blow up just because one doesn't go. If you pick and choose the one that's definitely going to work, chances are you're never going to make money. Buy the basket strategy. Buy the basket. Buy one call each. Let's say you say, okay, I'm going to put $800 in these things. So buy one call each of them. If it doesn't really fit in, it goes over budget, then, whatever. Then buy something a little bit out of the money. I generally tend to buy in the money. Buy out of the money, but at least you buy the basket. So when it goes, you're not sitting there going, I should have done that. Some people say, I don't do earnings. It's a toss-up. The whole freaking game of trading is a gamble. All right, guys. That's it. I'm not going to take any questions. Yeah, I will take a question or two. So a quick question. We'll be happy to answer that, please. So let's go ahead. I'm pretty exhausted today. Busy weekend. Any questions, please? Go ahead, please. And let me remind everyone that the most common stock ever, Apple, which I said, was going to go, based on my charts, was up huge. I didn't even realize it till I turned my head and like the thing's up to and change. I'm like, wow, I did get alerts, obviously of my system. But this is Apple. And I said it was going to go to 213 based on, the way I measured it. It's more like, if I really want to be technically correct, this is the number we're looking at on Apple. Yeah, 212. And we almost got to 212. This was a beauty trade. Those lottos were cheap as hell last week when I recommended it. I think it was Thursday and Friday. I said, buy Apple. They were 70 cents. They went to $2.35. Woo! That's more than 250% ROI. A three-bagger. A three-bagger on Apple. Not earnings, just pure trade. So, again, let's... Scotty's saying you're awesome. Thank you very much, my good friend Scott. But that's not a question. So somebody go ahead and ask me a question. What do you think is going on with Google? Amazon is climbing. Google's done great. Again, here's another retail trader who is not focusing on the charts. Amazon is a different ball game. What is going on with Google? Google's great. I made money on Google, and anybody who traded my charts made money on Google. So let's pull up Google. So that question that you asked me, Walter, and with all due respect, where is Google? With all due respect, you're not trading Google correctly. Google's fine. Just because Amazon every day is up 16, 30 bucks means nothing. So Google, in my opinion, is the highest upside. I have traded Google almost every day profitably on a swing trade too. So here's your chart on Google. All right. Like I said at the beginning of the onset of this thing, that is not my history with it. Understood. What's your history with Google means nothing, Walter. All right. Your history on a particular stock, and I'm showing Google right here. Let me just clarify a point. Your history, whether my experience with the stock or your experience with stock, means nothing. Means nothing. So just keep that in mind, because you and me are inconsequential to Alphabet. So get that through your head, Walter. All right? Seriously. What your history is with the stock means nothing. All right. So here's Google. The calls, like I said, if you scaled in on Friday, like I said, you have to always, even if you didn't scale in, exploded. They went from roughly $5 to $10.50, and these are the 1267.5s. Not to mention the 1280s. Just to give you an example, let's say the 1280s. I actually pushed the 1270s. They went from $1.35 intraday to $5.50. They opened up at They opened up at 3. So 3 to 550 is almost a double on your money. So Google basically, just like the market, sold off around 11 a.m. Looking at the chart here from a technical standpoint, Google, we would like to see it attempted the break-in into this upper channel, and what we would like to see is it cover this level here. When Google really starts moving and it's a consistent mover, it's going to happen very quickly. Just the way it happened very quickly here, just the way it happened very quickly here, just the way it happened very quickly here. It is going to happen very quickly. Along the way, there are major resistance levels which have been highlighted. Upper end of the Bollinger is 1270. So Google's really, and I've shown that on my quad charts, which are more range trading, that Google is trading in a range right now of 1265 and 1250. 1270, 1265, 1250. You have to manage your trades accordingly. Nothing around it. Okay, what's the question from NVIDIA? NVIDIA ER is coming. I have showed the NVIDIA chart. I like it. I think it's here. Let me just pull it up. I personally like it. And there's NVIDIA. So NVIDIA is, as you can see, very choppy, but it's a defined pattern. You can see that. So lower end of the block where the stock basically can come down to if things go really wrong is 233. We want to be very aggressive buyers here. However, there's an acceleration channel here, which is 243 and 264, right? So we got 20 points. It's a 20-point band that the stock is trading in. You can clearly see that. Now, upper end of the move is 269. I believe that's the high of NVIDIA, right? I believe that's that's the all-time high. So it's very close to its all-time high. If somebody asked me what NVIDIA is going to do, I think they're going to blow out numbers. People, I think their data center business, their gaming business, chip business, I'm actually upgrading my computer system in a big way, and I'm putting in the newest NVIDIA graphics card so that I can service you guys better. Because I'm running these real-time charts that I'm copying and pasting and putting it up on the Twitter feed on the midst of a very heavy day. They get slowed down because I'm running multiple screens, right? So this new NVIDIA processors, they're like sick. The GPU processors, it's unbelievable. It costs a little bit, but hey, you gotta pay. I gotta pay up for the high-end devices. So the system's getting upgraded, and when they come, I'll be able to post charts faster. I don't know how much faster because I'm posting charts a heck of a lot faster than anyone else out there. But yeah, so this is the range. If things really work out, we're going to create a breakout, and that breakout, one way or the other, should take the stock up to 285. If we break down, then we have a buffer at 235 to 243. We want to be buyers there. So it's a pretty clean chart. And I suggested NVIDIA, so you know that. Okay, my good friend here, my good friend here is, and by the way, just so you know, Mr. Priebus, we recommended Amazon too, the 1920 calls. And if we take a look at Amazon's chart, which I should have it here. If Amazon calls weren't so prohibitively expensive, actually, they're not that crazy expensive. So this is Amazon's chart with the Bollingers with nothing on it. All right, so this is where we are. We're in the lower end of the Bollinger. This is the 15-minute chart. That's at 1896. Upper Bollinger is curving down. That's 1914. So that seems to be the range right now, 18 points. And this is what it looks like. The daily chart on Amazon is very. Oh, I do have a chart on Amazon. Okay, daily, hourly. Okay, the hourly chart. Yep. So it is the lower end of the base where I would be a very heavy buyer is 1880. That's another quick pullback first thing in the morning or so. I'm not saying tomorrow, but just in general. This was your breakout. This is your breakout, and that is 1880. There we go. 1880 is there you go. See that? Okay, that was your big breadth thrust bullish engulfing breakout to new highs. Came back and retested standard procedure. Back to 1880. 1880 would be a nice level to buy the stock. It looks like it wants to get there. Maybe it gets there by tomorrow. Right? Maybe, and you want to be, powerful buyer. Again, anything can change. It might break below that. Then the next level comes into play. So it's not like, things are written in stone. The markets are run by a lot of volatility algos and a lot of big time news flashes that are coming out. Turkey, China, Russia. So we have to be, I'm processing all that and telling you guys what I see, and most of the times I'm correct, but extremely volatile. So these are the levels that we should be watching for on a extreme sell-off, 1840, the first breakout. Remember, this was a cup and handle. You can see that cup, little handle. See you later. We traded this repeatedly. So 1840, the next level is 1864, 1880. I like playing earnings now. Earnings have been very kind to me. Some of them have blown up. Most of them have gone through the roof. You have to be in it to win it. Remember what I put out there the other day? Seriously, print it and paste it on your head and on your wall. The biggest risk of all is to do nothing. You have to be in it in order to enjoy those 300% triple on your options overnight. Little bit basket approach, change the makeup of your overall trading portfolio. Seriously, can you share the current swing 533 chart? Not swing 55 house, swing 533. Yes, I can. And that is what it looks like, and it looks like it wants to go a little bit lower at this point. This is known as the swing 533 chart. I'm not going to sit here and explain the whole dynamics behind it, but I'm just going to walk you through it. I do have explanations of the swing 533 on my YouTube channel, on the new member introductory video, and ACS members know exactly what this is. You can clearly see here, House, very quickly, that we are looking at the swing 533. We have a negative. We have gone negative here on the MACD. This is still not showing any signs of a turn yet. I believe that by the time, I still believe that we will test the 2800 level, which is only 20 points from here. That means another 120 point drop in the market, which brings us to 25,000. Slightly above that, we will have a fantastic buying opportunity. Generally speaking, for newer people who've never seen this chart, this is a directional bias chart known as the swing 533 because that's what I know. That's what the full stochastic parameters are. Bottom line is, when the stows turn like this, you want to be long. So one thing I do want to point out, despite these adverse markets, I put that out earlier today, lots of reds, markets down 125. We're kicking butt, New York style, on multiple select trades. And I got to put a feather in my cap on that. I don't give a hoot what people tell me. We are kicking butt, even in the most adverse conditions. So yes, technically speaking, markets want to go lower a bit, even though at some points of the day, the way things turn, that's how algos do it. In the old days, it wasn't like this. In the old days, I could make a more definitive conclusion. It's definitely going to go there. Now there's no definite, but most probably it's going to get there. So it could turn and just rip the heads out of the shorts because there are way too much shorts in the market. The put call ratio is at a 1.02. That's pretty high. The trend closed at 1.8 today. 1.8, the trend reading, the arms index. You know what that means? That means almost capitulation levels. So given that there are so many shorts, so many people out of the market sitting in cash, so many SOA bunker diaper traders, that the markets will most probably have a tough time really going down. All it needs is a little bit of good news, and see you later. Whichever the case, swing 533 is telling us that we should be getting close to the stows starting to turn. And just because the stows turn here doesn't mean the market's going to 2730. No, some of you might be reading it like that. It's nothing like that, okay? On my ACS sessions, I explained this very well. So sign up on them. And like I said, you want my intellectual years of experience that have been that has worked. Well, you got to sign up for the advanced coaching sessions. Not everything. I don't believe in a welfare society. Not everything can be given for free. So anyway, saying all that, generally, if once the stows turn, you get a very powerful move, which is a multi-day type of move. The house, no problem, brother. What do you call? If you house said my fault, don't worry about it. Swing 533. You don't need to apologize. So bottom line is that once it starts to turn, it turns. Now let's take you want to say long on a swing trade. Now let's take a look at the weekly on the 533, which should give us an idea what's going on. Now this is more troublesome. Okay, this is more troublesome. What this is telling us, and let me just show you guys something. What this is telling us, we had an inverted hammer here. That means the market has short-term peaked. There's a lot of mixed signals in the market, but I'd like to look at all of them to at least understand, draw some sort of conclusion. Let me just do this pivot. Let me just do this again. Simple moving average. Let's make this 4 months. Let's make this 6 months. How about that? Let's change the thing to... And here we go. Looks prettier, right? I'm a good painter. I'll paint the charts for you guys. How about that? Not your walls, but the charts. All right, here we go. Bottom line is, this is what's showing me. It looks like we want to get down here. That means the next couple of days it's going to be very tricky, which means we might very well test 2790. This is the reading I'm getting from the SPX weekly chart here. Nothing crazy right there. Because once it gets down here, that's when the stove starts to turn. This is on a weekly chart. It's cutting out the daily noise. So this week, first part of the week, we could very well get that thump that brings us down another 150 points or so, like I talked about before, 120, 130 points. Brings us, it doesn't necessarily have to go in the negative. If it goes in the negative, you definitely want to buy it hands down on the weekly. And I'll show this chart. Not too much. I can't be showing too many things. Some things, I monitor myself. But the bottom line is that weekly is telling us there's pressure downwards. Now, saying all that, the stores are getting quickly oversold, and it could turn any minute. And in between, just because it's saying that the market wants to go and retest 2800 or 2790, it doesn't mean it's going to do it that day. It could very well do it overnight. It could very well do it over a 2-day period. Like I said, markets are not linear. And by this time, many of you have finally come to accept it because you constantly keep on believing that everything that's supposed to go down just should go down in one go. No, it doesn't do that. Along the way, there's the 1 hour, the oversold, 15-minute oversold, 4-hour oversold, and the market keeps on having these little bounces, little bounces, little bounces. And on top of that, like I said, there are way too many shorts in the market, way too many if you are bearish, way too many retail traders or SOA sitting on, you know what, just sitting there doing nothing. So there's not the bullish sentiment is dramatically dropping, which I've been saying this for weeks now. So when the bullish sentiment dramatically drops, you don't have big market drops. Capiche? Ever see The Godfather? Go see it. Capiche? There we go. Bottom line is, this is the positive part. The MACD is still, and I know House knows this stuff, the MACD is still very nicely in the positive. That's a good sign. When the MACD goes like this, that's when you know there's going to be some real fallouts. And if it goes all the way down here to minus 25, you want to buy with hands down because it is going to go in the positive. So right now, the MACD, as far as I can see it, on the weekly swing 533 is still looking pretty damn good. That's it. On that note, like I said, discipline. Gotta have discipline of trading these tactical charts. So I'm going to put this out. I have to do this. You gotta do what needs to be done even when you don't want to do it. And that means buying tactical lows. I don't care what your little puny brain is saying, or my little puny brain, which only has 3 brain cells left, by the way. All right? All kidding aside, is telling me I will scale in and then get the rewards on a beautiful Monday morning. Great start to the week. And I know many of you had that too. So God bless you all. And many of you who have been constantly listening to those inner voices in your head, well, maybe it's time to try something different, because doing the same thing over and over again, you know what they say, and trying to get a different result, is called insanity. So if you want to be a retail emotional trader, constantly keeping on doing the same thing over and over again, selling at the wrong time, buying at the wrong time, going with the prices only without watching the overall charts and internals and all that stuff that I put out there, then you are insane. And insanity will eventually drive you out the crazy, make even an amazing trade that you're in go wrong. And you know how it goes. So let's stay confident. Let's move on. We're all in this boat together. I am doing my 110% to help you all. So let's make it happen, guys. Let's have a great week. God bless you. Bye-bye.